Welcome to WorldWire. Please subscribe and hit the bell icon for more breaking updates. The European Union has long protected its iconic car brands, Volkswagen, BMW, Renault, symbols of industrial pride and economic strength. But now, Chinese electric vehicle makers, led by BYD, are shaking up the market with unbeatable prices. European leaders are alarmed, fearing for the future of their car industry and the jobs it supports. In response, the EU launched a major investigation into Chinese EV imports, focusing on government subsidies that give Chinese companies a cost advantage. European car makers argue this is unfair competition, as they can't match the prices of state-backed rivals. The likely result? High tariffs on Chinese EVs, making them pricier for European buyers and aiming to protect local manufacturers. This is a classic trade defense. Slow the influx of cheap imports, give domestic brands time to adapt. The US has already gone further, imposing sweeping tariffs on Chinese cars, even those made in Chinese-owned factories outside China. This move has effectively shut Chinese EVs out of the American market, escalating global trade tensions. Now Europe faces a similar crossroads: defend its industry or risk being outpaced by China's rapid EV expansion. The stakes are high, not just for car makers, but for the future of Europe's industrial landscape. The EU's actions are about more than cars. They're about economic sovereignty in a changing world. The battle lines are drawn, and the outcome will shape the future of mobility in Europe. BYD didn't back down when faced with European resistance. Instead, it doubled down. The company announced a $1 billion investment to build its first European car factory in Hungary, right in the heart of the EU. This isn't just about making cars, it's a strategic masterstroke. By producing within the EU, BYD sidesteps tariffs and positions itself as a local player. Hungary offers skilled labor, established supply chains, and a government eager for foreign investment. The new factory in Szeged will handle everything from bodywork to battery installation, signaling BYD's long-term commitment. This move transforms BYD from an outsider to a European manufacturer, blurring the lines between imported and local. It's a Trojan horse strategy. While Europe debates how to block Chinese imports, BYD builds its presence from within. Cars made in Hungary will be labeled Made in Europe, neutralizing the EU's main trade weapon. BYD's investment is a clear message. It's here to stay, ready to adapt and compete on Europe's home turf. The game has changed. BYD is no longer just knocking at the door, it's building a house inside. Europe's car industry must now contend with a formidable, new neighbor. BYD's Hungarian factory isn't just about cars, it's about jobs. Thousands of new positions will be created, from engineers to logistics experts, boosting the local economy. This promise of employment wins support from the Hungarian government and local communities. It reframes BYD as a partner, not a threat. An investor in Europe's future. Local suppliers and service providers will benefit too, creating a ripple effect of economic growth. By hiring locally and integrating into the community, BYD becomes part of the European fabric. This approach softens its image and builds trust with consumers and policymakers. The message is clear: BYD isn't just selling cars, it's investing in Europe's prosperity. This strategy helps ease political tensions and positions BYD as a key player in Europe's green transition. Jobs aren't just numbers, they're BYD's ticket to acceptance and long-term success in Europe. Building a factory in Hungary is BYD's masterstroke against tariffs. Cars made in Szeged are EU products, not Chinese imports, so they dodge the tariff bullet. This keeps BYD's price advantage intact, letting it offer high-quality EVs at prices European brands struggle to match. Local production also unlocks government incentives for buyers, making BYD cars even more attractive. European customers could get a lower sticker price and a government grant, tipping the scales in BYD's favor. Established car makers can no longer rely on tariffs for protection, they must compete head-to-head. BYD's efficient supply chain and lower costs put pressure on rivals to innovate and cut prices. The Hungarian factory isn't just a building, it's a direct challenge to Europe's auto giants. This move forces the entire industry to accelerate, potentially making EVs more affordable for everyone. BYD's local presence is a wake-up call: adapt, or risk falling behind. The competition is now on European soil and the stakes have never been higher. The future of Europe's car industry may depend on how it responds to this new reality. Europe is just one front in China's global EV offensive. Locked out of the US, Chinese EV makers have surged elsewhere, capturing 16% of the top 30 global markets, up from just 0.3% in 2019. In places like Thailand, Chinese EVs now dominate, holding nearly 90% of the market. In Brazil, it's an astonishing 99.5%. This isn't just about cars. Chinese brands are also conquering smartphones and home appliances worldwide. The American blockade forced Chinese companies to pivot, and they did so with remarkable speed. They targeted open markets and price-conscious consumers, building global scale and funding further innovation. Now, with global experience and momentum, BYD is turning its focus back to Europe. The lesson: when one door closes, China finds another, and often it's even bigger. Europe is the next big prize, and BYD is ready for the challenge. The world is watching to see if Europe can hold its ground. Made in China once meant cheap and low quality, but that's changing fast. BYD and other Chinese brands now invest heavily in research, design, and manufacturing excellence. Their cars feature high-tech interiors, advanced software, and world-leading battery technology. Customers are discovering that Chinese EVs offer impressive features and reliability at a fraction of the price of European rivals. In markets like Indonesia, Chinese appliances are praised for being cheaper and smarter than established brands. BYD's strategy: pack more technology and value into every car, making luxury features standard. The company even unveiled a $230,000 electric supercar, proving it can compete with the world's best. This elevates the entire brand, convincing buyers that BYD's affordable models are built to the same high standards. The old stereotypes no longer apply. Chinese quality is now a selling point, not a punchline. The value proposition is clear: more tech, more quality, less cost. BYD's rise in Europe is a turning point for the global car industry. It's already surpassed Tesla in EV sales and is now challenging Europe's biggest brands on their home turf. European car makers face a tough choice: innovate quickly or risk being left behind. BYD's mastery of EV technology and cost efficiency gives it a major edge. This fierce competition will likely benefit consumers: lower prices, better features, and faster innovation. The BYD effect could speed up Europe's shift to electric vehicles, making them accessible to more families. The industry is being forced to evolve, and the pace of change is accelerating. BYD's investment in Hungary signals the rise of a new automotive superpower. The era of uncontested Western dominance is ending. The race for the future of mobility is on. Who will rule the roads of tomorrow? The answer will shape how the world drives for decades to come.